Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, so S&P 500, and we talked a couple days ago and last week about this battle over the green line, which is your 20-day moving average. Basically, in the short to intermediate term, it's the line that you want to be above or below because that indicates whether it's a market where everybody is coming in and buying dips, meaning, things tend to head higher as you see here, or whether it's where a market where it's living below this green line where they're selling a lot of the rally. So the market goes up, they sell it, it comes back in. The red line down here is the 50-day exponential moving average, so the average of 50 days worth of price. It's come down, it's held here, and they've bounced it yesterday. They really, the bears really, they've had some days where they've, tripped over a blade of grass and fallen on their face, and yesterday is really one of those days. They had an opportunity to convert the red line, and they ended up tripping, falling down, and closing above not only the green line, which is the 20-day average price, but the blue line, which is the 9-day average price. And what you're seeing this morning here is you're seeing those two lines support the market. If that happens and you take out the highs from yesterday up at 39.12, then you're starting to look at the highs from back on Thursday, Friday. The Thursday high was 34.5. If you get above 34.5, then there really isn't much else to do except take out the all-time high at 39.59.25. So hourly chart, they're still battling over these two lines. So here's, on a smaller scale, this is a 1 hour chart. You've got the 9-day, your blue line, and the 20-day, which is your green line. The weekly pivot, so that's the high, low, and close from last week, divided by 3. It's a very standard measurement in trading. 38, 42, and 42. They spent yesterday pre-market establishing support at weekly pivot. So we get into the regular session and they rip the open. They take it straight up. They take out both the 9-day and the 20-day before lunch. We chop a little bit and we kind of, we keep bumping on the round number 3,900, which is a natural place to pause. But they didn't look good. This is an hourly chart. The bulls didn't look particularly good for about 3 hours. So we were in a long, and we had, profits taken, and we were in a big trade. So it wasn't all that troubling. They finally figured it out late in the day. They hopped up and did that 39.12 here, closed it near the highs, above 3,900, above all the lines that we were, concerned about whether they could close above or below. They pulled it back in Globex. Bears looked pretty good for a while. Europe bought it about 3 in the morning, and now we're just in this big battle. You got the thin blue line here, which is your hourly mid-band, dividing line on the hourly chart between bullish and bearish. You've got the daily, you got the hourly mid-band. You have the daily pivot here coming in at about 75, 76. Your 9-day, your 20-day. And it's just been, we're playing tennis here, above and below these lines. And if you've been trading it overnight, well, you're the ball. We shorted 04, which was nice. We took profit. We punched out of it on the move back up to 84. So we're flat now. We'll be flat into the open. We got about an hour and a half before the regular session opens up here in the U.S. And I'll be very curious to see today where we close relative to these two lines. So what do the bulls need to do today? They need to convert this entire area. They need to stop playing patty cake in here, and they need to establish support here, similarly to how they established support down here at the weekly pivot. So it's just basically rungs on a ladder. Convert this rung, you want to convert this rung. You want to take out 12, which we were looking at on the daily chart, which gets you back to these highs here from Thursday at 34. You take out both of those. And you start looking at highs. What do the bears want to do? Well, first of all, they need to wake up and find their car keys. Get up, find your car keys, and get moving. You need to convert everything back through here. You want to ideally close below weekly pivot and try to grab, as you get into Wednesday, Thursday, Friday of this week, the directional pricing that comes with winning the battle of the weekly pivot. If they can't do that, well, guess what? The bulls have already won the battle of the weekly pivot, and they'll jam them up all the way through Friday. It really feels like we're getting back into a market where the bears need news, and the bulls just need to keep kind of holding serve at these key areas. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care. Trade them well, and I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.